Hello, and welcome to this webinar from wherever you're joining us today. I'm told we have over 1,000 registrants, and so for all of you joining us, whichever time zone, welcome. Now, we're reaching the end of our educational program of webinars, and I hope you're able to have through these, you're able to have a more informed conversation with your CFO or your board, irrespective of whether you feel ready to take the plunge and invest in digital assets. We did a survey last week of a lot of Treasury folk, and it's very clear that this story is evolving. A number of people have said they've had no conversations, but interestingly, probably about 15%, which was higher than I thought, have already had conversations with their boards around digital currencies and CBDCs. We'll be covering CBDCs in a bit more detail with my colleague James this afternoon, and they were touched on in the payments conversation this morning. So it's definitely an area of real interest to a lot of people. And a reminder also that if you do attend all 4 webinars, you get a digital badge to reflect your participation in the program. And a reminder, if you've missed any of the previous webinars, they should still be available on the ACT website. Now, next year, we're developing a program that will focus on the emerging world of decentralized finance, sometimes called DeFi. And if you'd like to get involved as a participant or a sponsor, please drop an email to technical@treasures.org or myself. So we're going to do a brief recap. I'm going to turn to my guests to cover some of what we covered earlier in this program. So first, I'm going to turn to Peter to tell us a bit about what we covered in session 1.
Sure. So nice to see everyone again. So in the first session, I mean, from our side, we mostly focused on really what this ecosystem is, the growing technology of blockchain, and its allowance for creation of really a different part of an organization's cap structure, and how that allows for economic benefits to be aligned between an organization and really its customer base, which is a quite powerful dynamic that we've never really experienced before. Most people obviously think of Bitcoin and cryptocurrencies, but obviously this goes kind of well beyond that. And based on the ecosystem and structure of the asset class, there's not only ways to invest in the high growth aspect of the technology, which certainly at this early stage is inherently volatile, but opportunities to take advantage of the overall inefficiencies in the ecosystem to generate, frankly, very high yields with very low volatility. So that was a big focus of where we were centered on the first call.
And I think one or two things that I took away there are over 4,000 different types of cryptocurrencies, and it may well be more than that by the time we've actually finished this conversation.
Yeah, there's well more than that. If we're talking about digital assets, there's probably about 10,000 plus. Cryptocurrency as being a subset of that is going to be smaller, but yes, you're exactly right.
And as we discovered, I think it's quite useful what we did in the first one about trying to segment them, and we'll keep coming back to that over the 3 and the 4 that we've done. But I think it's also really useful to make sure that people understand they don't all work the same way, they don't all have the same purpose, and they don't have all the same attributes. So again, when I have conversations with people, I'm much quicker now to say, well, when you talk about cryptocurrencies or digital assets, be more specific about what you're talking about, because I think we've moved beyond a point of treating them all like a Bitcoin. So I definitely found that really, really helpful. Hassan, I'm going to turn to you for sharing with us a summary of session 2.
Absolutely. Hi, Naresh. Hi, Peter. Hi to everybody. So the session 2, we really picked up right where Peter left it off. We actually underscored again the importance of understanding this ecosystem and the fact that it's not just one asset class, even though people often refer to it as one asset class. There's actually a plethora of different asset classes. And while they all seem very different, some of the underlying economics could be broken down and approximated to traditional asset classes. So if you want to really understand the basics, you can actually find into these different tokens, you can find some things that behave like equities, other that behaves like debt. So it's actually useful to sometimes go back to basics and break these down to better understand the assets themselves. Secondly, of course, we talked about, how do you go about investing in them, and then what's the infrastructure that you need. And of course, the most important thing is to actually define what the goal behind the investment is, right? Is it about diversification of a portfolio? Are you looking to get directional exposure? Or maybe you're simply trying to facilitate operational activity, let's say accepting payments in crypto, for example. That's important because, of course, it then drives a lot of downstream considerations with regards to the processes and infrastructure that you need to put in place. And coming to the point of getting exposure to the crypto assets themselves, there are many different ways, but at a high level, you basically have a choice to make between getting direct exposure or passive exposure. And passive exposure is pretty much analogous to the way you would get passive exposure to some of the other asset classes, either being an LP in an existing fund or buying some sort of an exchange-traded product. The difficulty comes and the real journey begins if you really want to get direct exposure to any of these assets. And there, at a minimum, you need to figure out what the right infrastructure is and then the downstream processes. You would need most probably a custodian that would help you safeguard these assets and put some controls around them. And of course, you need sources to liquidity. These can be either exchanges or OTC desks where you can go and directly buy the currencies. And of course, then it's very important to consider all the different operational aspects, which will penetrate literally the whole organizations, from kind of the day-to-day operations in your Treasury department through to how compliance deals with it, through to reputational risks that you might to handle even at the board level. So it's really important to get clarity based on your sort of chosen way of getting exposure. What are the downstream consequences? And of course, to seek advice and to take it step by step, because don't forget, this is not a race. We think this is a fundamental change in the way not just finance will operate, but also the way the world will operate. And what's important is to get on sort of the right track and to work from a very strong underlying base on which you can build on.
And again, what I really enjoyed about listening to the second webinar that my colleague Sarah moderated was, and I think you've referenced it as well, Hassan, is for all the sort of, and pardon my expression, for all the sort of fancy jargon and the complexity that sometimes we hear when we discuss these types of assets. As you say, when you boil it down, a lot of the things that we need to think about are things that treasurers have traditionally had to think about: counterparty risk, settlement risk. When you use words like custodians, I'm sure a lot of people out there doing traditional treasury activities have a very strong and meaningful relationship with their custodian, understand the role they play, the security and the trust that they offer, the costs involved, etc. But actually, when they choose their custodian, when they choose how they operate in this space, those things that they need to understand, as you said, part of it is around objectives. They're the same things that we should be doing today when we look at this new world. So part of me thinks that we should not be blinded by the language and do I need to understand, some of the complexity and the maths that go behind it? Or do I just need to, once again, be able to distill what the risk is to me? What is the opportunity? And, as many people know, I spent 9 years at PwC, and the big thing there was, what is your elevator pitch? Can you articulate this message to a board of people who have plenty of other things to think about? So again, just going back, I think your points are really well made, that we need, I would say again, not to be distracted by the language, understand what it means. There are plenty of folks like Arca and Copper available with lots of education material that you produce, that we as the ACT produce. You've just got to start at chapter 1.
Absolutely, yeah. And actually, if there was one very badly needed role across this space, it's actually effectively the role of a translator who can effectively do the bridge between traditional finance and crypto, because crypto naturally emerged from the technology space. And there has always been this weird dynamic where finance people don't always understand technology well, and then technologists don't always understand finance well. And crypto is really the marriage of these two. So it will take us some time to get it right and to start speaking the same language. But I think we're much further away this path than we were, even 2 years ago. And of course, we should be mindful of some of the differences, because there are fundamental differences that you need to think about when it comes to crypto. For example, how does the role of a custodian evolve, given the non-recurse nature of the asset class? But by far there are a lot more similarities than actually people recognize.
Super. So, session 3, we heard more about investing in digital assets and how it can take place alongside existing investments, and also the importance of the governance framework that many treasurers should be familiar with. Peter, could you give us a summary of some of your key takeaways from session 3?
Sure. And I think that last point about the translator was especially on point. Frankly, it's I barely speak English, but the translation between digital assets and traditional finance is exceedingly important, right? Because there are underlying elements about the functionality of what is inherent in a token from an investment perspective, right? There are tokens that have cash flow associated with them. There are tokens of decentralized insurance companies like Nexus Mutual. It's very similar to analyzing a public insurance business, where you can look at a price to book and a loss ratio. And then there are others that are totally different types of assets. So I thought there were a few really interesting points there about how this is really multiple asset classes. But from an investment standpoint, the way we think about it as Arca, our background is in primarily credit investing, and we know how to invest, and we know how to invest bottoms up, looking at fundamentals, protecting downside, mitigating risk, and that could be both investment risk as well as operational risk, which is very important in this asset class, because as we know, the custodial solutions are different, right? There are no prime brokers. There's a completely different infrastructure that presents with it new challenges and new infrastructure needs. So the important thing about investing, about the investment in this landscape, I think, is to first and foremost, and this goes back to what you first said, just kind of forget about what you think about the asset class, right? It's not Bitcoin and Dogecoin and memes and NFT art and things that look like Ponzi schemes, right? I mean, there probably is, not even probably, there is some of that, as there is in any nascent asset class. But the overwhelming majority, and what we will see continue to grow over the next decade plus, are true kind of financial instruments that blockchain brings a new power to that didn't exist before, whether it's increasing the velocity of other assets and making them productive that were otherwise unproductive, or for instance, the ability to generate yield on assets that you otherwise wouldn't be able to aligning economic incentives between various stakeholders in an organization. So when you think about investing, right, there are macro investors, there are quants, there are bottoms-up fundamental investors, and you can apply traditional investment metrics to this ecosystem, and that's only growing and over time. Every day, frankly, it becomes more and more uncorrelated as a overall collection of asset classes. And one thing I would implore everyone to check out, we just published it actually, I believe yesterday, but it's on the Arca website. We have a kind of a primer out on the different types of digital assets, because space is so new. There is no Morningstar taxonomy of looking at this asset class. So we really tried to break it down by what purpose these various tokens serve, and really importantly how they're governed, because that is an aspect of this asset class that you really don't see in traditional equity or debt, because it's all the same. But in this asset class, governance is extremely important. It can be very different.
Super. Well, we've really, I feel like we've already covered enough in one webinar, but that's been really helpful. Thank you very much. So today, the fourth one, we want to try and pull all these insights together, and I guess have a more conversational discussion about the market. And for me personally, I have to say, I've really enjoyed working with folks from Arca and Copper. I've really enjoyed their help in producing this educational program. As I think everyone recognizes, there is more to do in the space. So we had a very long introduction, one that we normally wouldn't have as long, but a reminder, bit of housekeeping. You'll see widgets. You should all be familiar with these. We've got an audience Q&A. Please feel free to throw these in all the way through the session. It makes it much more interesting, exciting, and dare I say challenging. Not for me. I just read the questions out, but for Asan and Peter. So let's make them work for their time being here. A reminder, this session is being recorded. It'll be available on the event platform for 14 days, but also separately on the ACT website. We're running a discussion forum. Please feel free to join, participate, share your thoughts, and always get engaged on our LinkedIn site. We've got a hashtag ACTFTT and we're Twitter ACT Update. I've taken the liberty of asking Asan and Peter to talk a bit about the sessions that they worked on, but I'm also going to go back and ask them to do a few quick introductions about themselves and their companies. Myself, I'm Naresh Agrawal, and after 30 years in Treasury, and I provide policy and technical support here at the ACT. I've been following the market for digital assets and written about them for the Treasury magazine. And many of you will be entertained about my personal forays into Bitcoin and Ethereum and how I'm doing against my teenage son. So joining us today, we have in company alphabetical order, Peter Hans, who's the Chief Strategy Officer at Arca, and Asan Kostadinov, who's Head of Strategy at Copper. So I'm going to sort of pose some questions to each of you. So the first one I've got is, we've seen rapid growth in this market. And earlier this summer, when I spoke to a major player, they told me they transacted $5 billion for corporate investors year to date. Can you tell us a bit about the types of customers that are coming to you? I'm going to turn, Peter, to you first.
Yeah, sure, absolutely. I mean, we have a couple different sides to our business, and frankly, that'll be growing in the coming years as we develop more. But on the institutional asset management side, it's a really interesting evolution. 2-3 years ago it was very much high net worth individuals, family offices, and then as this, I would say, asset class became more diverse and expanded, and institutional adoption has increased globally. We've really kind of expanded our customer base to move, I would call it upstream, more institutional, which was always our intention. So, now, especially in Europe, we're working with, large multifamily offices, wealth advisors, all the big kind of European banks from Credit Suisse, UBS, Deutsche, Dresdner, and that's frankly throughout Europe, South Africa, Asia, Singapore, and the U.S. is frankly a little behind in terms of institutional adoption, but we are starting to see and do have some endowment foundation investors, as well as kind of larger RIAs, and we're actually starting to talk to the first kind of larger money center banks in North America about getting our kind of different digital asset investment vehicles on platform, which is really exciting. And then on our more innovation side, where we look at blockchain as a vehicle to, in essence, tokenize different traditional assets, there's some much more big brand name traditional asset managers that we're working with to do, frankly, some really exciting things in terms of tokenizing more traditional fund vehicles and more traditional asset classes like commercial real estate. So I think we'll just continue to see more and more of that, over time.
Okay, interesting. Asan, what's
yours?
I
mean, a pretty similar story on our side. We also have a couple of different facets to our business. In our sort of SaaS side, where we actually service people with custody and settlement and trading solutions, you really need to just follow the risk appetite to see how the types of clients have evolved. Usually in a space that is perceived very risky, you would get people with kind of the highest level of risk appetite. And those would be the people that can actually take that level of risk. Usually you would be seeing high net worths. Also in the beginning, specifically to crypto, there were a lot of crypto native traders, prosumers, and trading firms, which were really sort of investing their proprietary capital. And that's how the space started. And soon after, as there was a bit more market cap, a bit more liquidity in the space, some of the hedge funds also got involved, family offices, which can be a bit more flexible when it comes to their mandate. Then probably the big story of 2020 was kind of the few high-profile corporate treasurers that started talking about this thing. So you kind of saw some movement on that side, even though I know it's probably the minority at this point that actually have the exposure to the space. But we're seeing a lot more movement, a lot more desire to experiment and to understand what this space is all about. Naturally, some of the kind of really patient, very large investors, though, and I'm talking about the large pension funds, the big endowments, these guys are now coming into the space. I mean, some of them have been pretty early with investments in VC funds, for example. Yale Endowment in the US have been a long time LP into some of the crypto funds in the US. But for these guys to really start deploying capital properly and to have even a small allocation of their portfolios, you need a very, very deep asset class. And I think we still have a bit there to go with crypto. I think the major story of probably the beginning of this year up until now has been actually the arrival of all the service providers and the banks. The banks tend to move slower, firstly, because they have, they operate under very strict regulatory policies, frameworks, they care about reputation. And really, they're just the sell side, right? They're not going to move unless the buy side makes them move. And what was really interesting is to see how quickly they moved once they saw the push from the buy side. I've never seen sort of large tier one investment banks, the largest custodians, move so quickly when it comes to trying to onboard technology providers with them. So that's how I would sort of describe the change of the number of participants and the types of participants.
And just sort of picking up on a point that Hassan and Peter you both made. I mean, for me, one of my learnings from this year and these webinars was I can't remember, Peter, whether it was maybe Jeff talked about the highly regulated pension sector in the US and the fact that there were pensions now looking to invest in the space, which I guess tells a story about how far we've moved from the Wild West of, I guess, 3 or 4 years ago. But it'd be useful to get your thoughts on the sort of regulatory perspective and how you think that's either helping or hindering the market. I mean, not every day, but we still read, I still, I don't open the FT because I read it online now, but there are still days I come in and I read about a country, India has had, yes, it's acceptable, no, it's not, retail, wholesale. China's had some engagements in this space as well. So I still feel we operate in a world where it's not entirely clear the direction of travel. Is that, do you think, impeding some of the more traditional organizations around engaging in this space?
I mean, from my perspective, I don't think headlines are impeding adoption, but I do think, at least and I'll speak for the US, I do think regulatory clarity is impeding adoption. Right now, and I think Hassan mentioned it, there are many different types of use cases of asset classes across digital assets and really across this adoption of technology. There's zero doubt in my mind the technology of blockchain will be adopted and have many use cases over the next couple of decades, frankly. There are some use cases that probably won't fly, whether from a regulatory standpoint or a business standpoint. And there are others that, will develop more quickly, and others that will take more time. I think when you look at, different countries and moves they make, you kind of have to look a little bit more granularly as to, what is this nation's motivation and what assets are they really talking about? Like, I'm by no means an expert on the inner workings of China. I don't know that anyone is, unless you're directly involved. But I mean, their moves with mining and Bitcoin specifically, right? I mean, they are launching a CBDC, a digital yuan, right? So clearly blockchain adoption is not an issue for them, right? Like that is something that they are moving forward with, but they are looking to minimize competition for the digital yuan, right? When you look at the U.S., I mean, there's different motivations there as well. There's concern about the dollar being the global reserve currency, and how does the digital yuan affect the dollar's place as that global reserve currency. U.S. isn't terribly concerned about Bitcoin, but there are politicians who gravitate towards narratives, and partially, frankly, it's because of a lack of understanding of the overall asset class. But I think it is imperative that we do get regulatory clarity, over the next few years, to really see this asset class continue to take further steps. And I don't necessarily even think it's about, more money coming in, because that will happen organically. It'll just happen slower. But I think from an issuer standpoint, I think we saw on Starbucks's, quarterly call that they're looking at, tokenizing their rewards program, which is not only a perfect use case, but it's something, on the podcast that I host for Real Vision Between Two Chains, I talked about that exact example as, something that makes all the sense in the world, to simply tokenize, right? Every company, public, private, will have a token on their cap structure in some capacity in the next 5-10 years. But in order to see this, really proliferate, we're going to need to understand, where can these assets trade? How are they taxed? How are they regulated, right? How do you monitor for investor protection when you don't have a centralized entity enforcing those investor protections and those regulations? These are questions that need to be answered.
And let me ask a question, and maybe Asen, you can respond to this question generally. When I look at, for example, the Bank of England and its CBDC engagement forum, most of the participants on there are from the financial services sector. Do you think we should be leaving it up to them, to organizations like yourselves? Where's the corporate treasurer's voice in all of this? Do we wait for the regulations to become a bit more clear rather than waste our time? Asen, to you first.
I mean, it's a very good question, actually. And I think the beauty of this space, to some extent, is that you don't need to wait for anyone. As an organization, of course, there's certain processes and frameworks that you need to follow, because otherwise you expose yourself to unnecessary risk. But just rolling back slightly and responding to the point Peter made, nobody expects from regulators to be leaders in anything, right? And that's not having a dig at them. It's genuinely, they have a very difficult job, right? The buck stops with them when it comes to sort of ultimately protecting the system, protecting individuals as a whole. So it's a very responsible thing, and therefore you can't be moving at a breakneck speed. However, if you look at that space, probably back in 2019, you would be a sort of hardcore believer if you were seeing the inevitability of this actually becoming a reality at scale, i.e. the paradigm shift that we are talking about occurring. What actually changed between then and now is not so much the space itself. The space changed a lot, but the context in which the world operates changed. So the macro picture changed, and therefore sort of some of the attractions of this space became blindly obvious to everyone, right? And that made people just dig deeper. Once you start digging in and taking a look at the various sort of models that are available, the technology, how it can be applied, it's very, very difficult to just take yourself out of it and say, no, that's just for crooks, or that's going to go away, or stuff like that. So there is some real underlying value in the ideas that are being propelled, which are just, they will persevere. I mean, they will be there in the next decades or two. They will come to define a lot of the aspects of different industry and actually our lives. So then, responding to your question, because the space is actually decentralized, right? That's the mantra. It's open. It's almost like the internet. It took us probably 2-3 decades to realize that everybody can be a contributor and build their own brand on YouTube or Instagram and make money out of that. That same idea is just taken up to the nth degree in crypto. So you have even more freedom, which of course comes with more risks, but essentially it gives you the ability to grab your own faith and go and make things happen. Again, as I said, when it comes to organizations, there is certain frameworks that need to be followed. You can't move that quickly, but you can definitely start to participate in the debate. You can start educating yourself and the wider organization, and there are plenty of tools in which you can influence the industry. I mean, there are plenty of industry bodies. Corporate treasurers are the biggest kind of pools of capital, sometimes globally. So they do have the power to influence the agenda. Whether they're going to influence it directly with regulators or through industry bodies or through their service providers, they definitely have that power. The only question is, how quickly do you get up to speed with what's going on, and how do you find the levers internally to actually make things happen and influence the agenda?
Okay, I mean that's. I think we're going to come back to this question you've raised about the role of organizations, and I really like this idea of the sort of open environment in which we can participate in a sort of more free way than we can currently do so. Just maybe developing that point. So when we talk to treasurers listening to this series, first of all, where can they go to get more information? You've said that's one thing they do need to upskill themselves around it. What sort of things should they be doing and engaging with the board? Is this just, I worked with a corporate, I think 2 or 3 weeks ago. They were producing a board paper, but it felt, and I may be wrong, so apologies if I get it wrong, but it felt like this was the only thing they're going to do in this space. They're going to write a board paper, let the board be informed, and that's the end of 2021 for them. So can you tell me the sort of things you think that for people listening today, they should be doing? Obviously, part of it is about what the roadmap should look like. Hassan, since you're off mute, I'm going to start with you first.
Yeah. So again, as discussed actually in the last session, I think the most important thing is to start learning by actually doing things. And inevitably that starts with the individual, right? Buy your first Bitcoin, go on Coinbase, go on whatever platform you feel comfortable with, buy your first Bitcoin, then buy your first wallet, try to make a transaction. See how this thing works in practice. That will actually tell you a lot about some of the issues that you need to be thinking when it comes to the broader corporate sort of process and workflow. It's also about just methodologically going down the various risks that you're exposed to. And the risks don't change, right? They're the same as they're in traditional finance. I mean, the categories of risks. Obviously, within those risks, there are different things to be mindful of. But, operational risks, how does your internal workflow need to evolve to accommodate digital assets? What are the types of systems that you will need? How do you integrate those internally? These are not, they may be difficult questions, but at least you know the question that you need to be asking. And then there are plenty of resources that are available today, plenty of providers. I mean, we are one of the providers. We do plenty of sort of education for our clients, and just broadly speaking, the space. We have an excellent in-house research team that writes a lot about these topics. Peter mentioned their own internal capabilities. He also referenced Real Vision. That's a great resource to use as just getting up to speed with the various trends. And it's a good resource because it does effectively translate between traditional finance and crypto as well. When it comes to sort of the market, the market risks that you need to be aware of, I mean, volatility is clearly a big one. How do you need to deal with hedging? Do you want any directional exposure? Credit, what are the type of counterparties that you anticipate to interface with? How much, where is your risk appetite? Regulatory, reputational risks. Importantly, also accounting impact of actually you engaging with digital assets. The point is, you already have the playbook. It's the same playbook that you're using for other stuff. It's just a matter of sitting down and starting to tackle the questions one by one. And the good thing is today, the ecosystem is so large and much more credible than it used to be probably 5 years ago. So you can actually go and speak to a provider that is handling big volumes of dollars, that is regulated, that has SOC 2 compliance, for example, et cetera, et cetera. So there is plenty of resources to tap into.
Peter, anything to
Yeah,
add?
sure. I mean, and I think I mentioned this on the the earlier session. Really starts with what your goals are with your interest, right? And that could mean, in terms of, do you want to own assets directly, or do you feel more comfortable working with an outside manager, be that for an alpha generating strategy, be that for yield access where it doesn't exist in other asset classes, or be that a more macro type trade, right? If you're looking at inflation hedges, right, something like Bitcoin makes sense, and then it's kind of a decision, like, do I want to custody this myself? Do I want to work with copper to alleviate a lot of that risk, or do I want to look at a vehicle of some sort, passive? So it really kind of starts there. In terms of understanding how the ecosystem works, totally agree that is though not necessary, probably important. And frankly, once you kind of start digging in a little bit more, you will want to learn yourself, and it can be daunting at first, but there are definitely ways to do it that are both lower risk and lower cost, right? I mean, I think I mentioned on the last call 2 weeks, I mean, we have a tokenized 40 Act SEC regulated US Treasury mutual fund that trades via an Ethereum based token, right? So like that is a really easy way of getting involved in the digital assets ecosystem while actually owning US Treasuries, right? So it really kind of depends on the goals and what you're looking to achieve. But yeah, all the resources that were mentioned, I mean, basically, there's tons of places. In Real Vision, I don't work for them. I just know the team and host a podcast for them. But it's a tremendous resource in terms of really the whole gamut, and it is finance people, so do kind of translate and speak that language. And then even at Arca, like we put out a blog that's really helpful. We publish a lot of educational materials. We consider it a big part of our job, even though we're an asset management firm.
I know because I've been Asan, I know your marketing team has spoken to us about participating in your podcast. So as you both, I think, make clear, it's clearly important. You're spending quite a lot of time and effort and money in trying to educate the market. I guess just sort of reflecting on part of what I've heard and part of what I've been thinking over the last few weeks is really, first of all, we know this isn't, I quite like the story about Starbucks, because one of the things that struck me again from one of the conversations during the series was this is not just about an investment class. This is not just about how do I move money. This is a question of value, whatever that means to whatever community of people. And I wonder if one of the things for people listening today is very much around, gathering a group of people together within the organization and exploring the different potential of tokenizing something that has some value, either internally or, with your B2B or B2C, or just internally within the organization. And I wonder if, again, we sometimes get caught up in thinking this is a finance play, when it comes back to what you said, Peter. What is your objective? What is the point of what you're trying to do? And it feels to me, picking up on what Asan said, that this is, if it's like the internet and it's so open, then actually I'm only limited by my imagination. And actually I could do a lot more. And as a treasurer, I wonder if there's a role for us to actually drive this conversation across our organization and play a really powerful and pivotal role in how this gets adopted in one form or another. Would you? I see you both nodding.
Thinking. It's certainly possible, right? I mean, there are a lot of applications, for the technology, right? And it could be, not pretending to know, the needs and use cases of every treasurer, on this call, or even any of the treasurers on this call. But even things as simple as governance, right? There are very, very strong blockchain use cases that allow for very transparent, very efficient governance over all decision-making processes. And you mentioned internet and public, right? Like, blockchain doesn't have to be public. There are private blockchains. There are restrictions over who can view, who can write, and this, again, it all speaks to the size and magnitude of this technology. And I totally agree with Asan. I think it's more than an asset class. I think it encompasses, and will, over the next 10, 20 years, this will encompass all asset classes. Everything will be a digital asset. So, that right there is probably a reason enough to explore.
Yeah, no, I completely agree with this. Like, the one risk I would flag, because I've been there before when doing education for people, is while the opportunities are really endless, and I mean this, like it's a vast opportunity space. Sometimes it helps to bring it down to one particular thing, and usually it's best to bring it down to one thing that you know very well and you have credibility in. So for a lot of treasurers, probably the easiest thing would be actually something to do with finance, and the rest is just essentially a backup material to say, look, the cost of us not doing, like, for example, just a very, very high level, stupid example, but we could use Bitcoin to, diversify our portfolio, right? The benefits of doing that are XYZ. The risks are XYZ. By the way, look at this context of where the world is going, how these things are changing. Look at what Starbucks is doing. Look at what all the gaming companies are doing with NFTs, and look at Facebook changing their name to Meta, whatever you think about that. But, these are all data points showing you how kind of the world is reacting, and the steps that they're taking, towards making that future happen. So that then acts as just a backup to everything that you're doing, and even more as an impetus to actually get involved in the space. But probably simplifying it on one single core use case that you know very well, and that you can devise a fairly clear plan on how to engage with, is the best course to get going.
Okay, super. I'm going to pick some of the questions that are coming in, and do please keep the questions coming in. We've talked a lot about exploring and getting engaged actually and starting to participate in the market. In terms of choosing what platform, where do you think people should go to in terms of deciding which one to use? Is there a guide out there? Is a source of information?
So of course depends on what do you mean by platform, right? Let's take an example, an exchange or a custodian. I guess while there are more and more providers out there, the really sort of high quality ones are only a handful, maybe 10 at most. It is perfectly viable for you to actually go and spend an hour with each one of those, and you basically run an internal exercise and see how they compare and contrast for your own use case. That's really important, because there isn't the way in traditional space you have multiple banks seemingly doing the same thing, but we all know each one has a different strength. It's similar in this space, right? So you basically, back to what Peter said, you need to have a very clear idea of what you're trying to achieve. And with that idea in mind, go and speak to these people and then compare them. That will also help you build a network, which will definitely be useful later on in the space.
Super. Okay, well, that's good to know. I've got another question around, it was going to come up, what my daughter still calls a doggy coin and a Shiba Inu. Somebody's asked a question about the value of these cryptocurrencies. Could you maybe, Peter, just tell us a bit about where you see these in this large ecosystem when we segment it?
I mean, we don't pay any attention to stuff like that. I mean, those would, how we segment those, to us, those would be cryptocurrencies. Bitcoin is a cryptocurrency, in that that's really what it's designed to do, and it's a store of value. It has no underlying business associated with it. There's no way I can build a model on Bitcoin and tell you what it's worth. I certainly can't do that for Dogecoin or Shiba Inu or whatever else there even is out there. What's the value of them? To me, the value is zero. But that's me. To anyone else, the value is what you ascribe to it, but there's no intrinsic value. What we tend to focus on when we look at the space, again, because our background is in credit and fundamental investing and downside protection, like I can't tell you what the downside of Dogecoin is other than zero. Even Bitcoin, frankly, like if all of a sudden everyone in the world doesn't ascribe any value to Bitcoin, then the value of Bitcoin is zero. I don't think that's likely, but that is possible. There are digital assets that publicly trade that we invest in that are tied to actual businesses. Again, it's a part of an organization's cap structure where there is revenue, there is a price to sales, there is a dividend yield. There's all sorts of ways that you can do traditional fundamental analysis. I mean, even take this Starbucks tokenized rewards program example, right? What is the value of the Starbucks token? Well, it's essentially backed by coffee, or bagels or whatever it is you buy at Starbucks, right? There are things that you can use it for. Binance's coin, right? You use it to get very discounted trading fees on Binance's platform. So there's ways to think about the inherent value behind that token. But again, this is why one of the first things we tell people is just like stop listening to the media, right? Like their objective is to generate clicks and page views, and it's a lot more interesting to talk about, the 15,000% price increase in Dogecoin than it is to talk about like a real world application of blockchain, right? But one of the craziest things to me is if you actually look at correlations of different assets, Dogecoin, even though it's basically a hard fork of Bitcoin, right? Like it's basically the code is Bitcoin without a supply limit. The correlation of Dogecoin is about twice as high as the correlation to GameStop and other like meme stocks than it is to actually Bitcoin, right? It's less correlated to Bitcoin than it is to GameStop Dogecoin. So like that should tell you all you need to know about that asset. If you want to buy it, go buy it.
Aslan, there's a question again about sort of platforms, and I think when this question is focusing around platforms, I'm presuming it's about where I can buy and sell crypto assets, cryptocurrencies. If I was to, somebody's asked again for some guidance on quality platforms. Is it fair to say start off by looking at which ones are regulated and which countries they're regulated by, and I guess importantly, what type of activity they're regulated to do? Are those the sort of things that we should be?
Yeah, absolutely. So, I mean, it depends. If it's about you as a retail investor, essentially, or a retail user buying something, then just look at, again, regulation. What does the KYC process entail? I would probably stay away from platforms that do no KYC. Might be easier, but there are risks down the line. Read through where they keep your digital assets, what are some of the SLAs that they have in place. But it's pretty clear, I mean, just from the mainstream media to figure out where you should go as a retail investor, where you should start. Because then once you get down the rabbit hole, then you might find yourself in different places. As an institution, though, I think you should just regulation is very important there. Clearly, if you have a regulated activity that you're conducting, you need to make sure that whoever you're transacting with is regulated to perform that activity. Of course, there are kind of the additional security requirements, the additional compliance aspects are much more important. So it's about, for example, if you're looking for an exchange, you should be asking yourself, am I comfortable with holding my assets at this exchange? Because it is quite likely that you need to pre-fund an account in order to transact on that exchange at some point in time. Then how does this exchange manage access to this account? There are still some exchanges who need a particular individual to sign withdrawals. So if that individual is somewhere nowhere to be found, then you might lose access to your funds. Talking about insurance that is available, SLAs, all these different aspects become very important. Then, I mean, I would also encourage you to not actually be transacting unless you have a custodian, i.e. ultimately a place where you can store your assets. And there, it's about security, first and foremost, i.e. can they demonstrate that there isn't a single point of failure that might mean you losing all of your assets? Because in this space, there is no bank to call, there is no SWIFT network to ping to basically get your assets back. So that's very important. The type of policies that they allow you to build so that you can permission access to different people in your organizations, the insurance products that are available, what sort of certifications they have. SOC 2 Type 2 should be kind of required, or ISO 27001, I think is the European equivalent. Regulation, very, again, important. And yeah, I mean, these are some of the considerations. I don't want to necessarily name any particular platform because I think, obviously, I'll talk about Copper. I don't think that should be necessarily the point here. The point is just to give people enough to arm them with the right questions so that they can go and do their sort of diligence. Again, I'll just reiterate these. The questions are the same questions you would be asking to any of your kind of providers out there.
And I guess that's what I was, as you were talking, reflecting on. You mentioned earlier, are they SOC 2? Do they have SOC 2 processes? Any ISO standards? I know from talking to a few folks that the accounting firms and the legal firms, a lot of people use them to undertake due diligence. I guess as a shortcut, maybe what people could do is look, for example, at a site like yours, your Copper site, look at the things you talk about that say why one should use you as a custodian, and use it to sort of benchmark any other ones that people come across, and use that as not the not necessarily best practice, but certainly good practice, the things that you're focusing on in terms of why people should be using folks like yourselves. I've got sort of 2 or 3 questions. I'm sort of mindful we've sort of got 5 minutes. I do want one last thought from both of you. A quick thought on the story around Tether and the stable coin. Maybe is this one for you, Assam?
Yeah, I was afraid that this question might pop up. Tether. I mean, that's the kind of Pandora box nobody wants to open. That has kind of been open already. I mean, look, yes, it is a problem for the space. But
can I just interrupt? Could you just very briefly,
yeah,
for people who don't know what the issue with Tether is, could you just give us a very short background to what they do, what the issue, and where they are now?
Tether is a stablecoin issuer. One of the, actually, I think it is the largest at the moment when you look at the actually stablecoins in circulation. The issue there is that what people claim is that Tether doesn't have enough assets backing the stable coins it has issued. So effectively, the way this is supposed to work is I come to Tether, I give them $1, they give me one USDT, is called USD Tether, essentially. And then, they manage that pool or treasury of assets in a way that kind of it backs the value that they have issued in USDT. And the claims are that they don't have enough. Tether has made public sort of disclosures to try and give people assurances, but they haven't made enough public disclosures to actually once and for all deal with the issue, which of course raises even more questions. I guess at the high level, for something like this to happen, it's an extreme scenario, but you effectively need to have all of Tether's essentially kind of initial customers go back and want to redeem their Tether, right? For this to manifest itself as a problem. Not that that's not, that is not impossible. There is certain probability of that happening. But if you're in the business of investing, it's all about kind of risk management, right? And it's a game of probabilities. So it's the probability that you assign to this very unlikely event and the impact it has on your particular portfolio and on the wider ecosystem, right? Stuff like this exists all over the place in traditional finance. It's just not that visible. I mean, look at Archegos. That's the latest example of an analogous situation where there was somebody trading across the board, having different exposures, no transparency whatsoever. Something pops, boom, a lot of problems across the board. No need to point to 2008, right? It is important for these things to be dealt with. And I think the way you deal with these things, especially when it comes to the asset-backed stablecoins, is by bringing them into the regulatory sort of perimeter, right? This whole thing of stablecoins are endangering the dollar or endangering fiat currencies, and therefore we're going to ban them. That's not going to work. I mean, if sort of public bodies kid themselves that this is going to work, they just need to look at how much the stablecoins have grown in the last sort of 18 to 24 months, when the rhetoric has been exactly the opposite. And talking about CBDCs, because I know this is the next session, it will be much simpler and more effective to actually have stablecoins within the regulatory perimeter than arguing that the Fed should issue a CBDC. That will face much more kind of backlash from the society, even from industry, because think about what the role of banks is if the Fed can issue their own CBDC, than just regulating stablecoins. So that's how I think this issue gets resolved. Whether it becomes a real problem in the short term, I personally don't ascribe too high of a probability on that happening, but of course it's not zero. And it will be, if Tether blows up, let's be clear, that will be a challenge for the space.
Super. I'm going to thank you very much. I'm sorry, Peter, we don't have time for your thoughts on it, but we have run out of time. What I like to say is, for me personally, I've definitely got a better idea of this new and evolving market. Hopefully you all have as well. This concludes our first educational program, and we'd love to hear your feedback on this as we prepare for next year. A few quick reminders: if this session is being recorded, will be available on the event platform 14 days. Do continue the conversation on our discussion forum. Please do complete some feedback. It's really important to us to make sure that what we do is useful and helpful. Finally, thank you for all the questions. We didn't get to follow, we will follow them up after this. And very quickly, just thank you again, Peter and Asan today. Thank you to Copper and Arca for sponsoring this educational series. Enjoy the rest of the festival, and enjoy James talking about CBDCs. Thanks, everyone.
Thank you very
Thanks all.
much.
Bye.